ready? What's up, guys? Hopefully you can see me. Can you see me? Can you hear me? Are we good? Obviously, you can see that I'm changing things up a little bit. I hope that you all can see me and hear me just fine. And audio's good, video's good. What's up? Jonathan says, yep. All right, well, hopefully you guys like this new setup. I've been messing around. You know, I always try to make things better for you guys and try to, you know, make things more engaging and more fun and, you know, not quite so, you know, just the same old boring stuff. So I'm going to still be changing and ever evolving and trying to make things better and give you a better experience for Stock Watch Sunday. But I appreciate you guys hanging in with me there and me kind of grabbing a hold of the growing pains that go along with it. But hopefully you guys will like this stuff. So, sweet. Awesome. Shane says it sounds horrible. Is it really horrible? Because I thought I had the right, sounds a little weird. Damn. Okay. Hold on one sec. I may have to go back. I'll be right back. Thanks, Shane. Appreciate it. I saw it the first time. Hold on one sec. Damn. Thought I had it. Yeah, because it's picking up the audio here. My bad, guys. Give me one moment. Hold on. Hold on. I think we're working on something here. Hold up. Hold up. And how about now? Can we hear everybody now? I thought I had it all tested out and ready to go, but I guess I didn't. Appreciate you guys. There we go. Here we go. Here we go. All right. Now we got the real mic. So it was picking up the webcam mic, which is obviously terrible. When you use the webcam microphone, it's terrible. But I wanted to use this guy, so I'll make sure I was good to go. So, all right. So there we have it. I'll get it there one day. But nevertheless, welcome, folks. I appreciate you coming in to Stock Watch Sunday. Thanks, Shane and O'Brien and everybody helping me out. I appreciate you. It's a community group effort, right? One of these days, we'll look back and laugh at some of this stuff as far as the growing pains are concerned. But nevertheless, I appreciate you guys. Thanks so much for tuning in. And if you're not familiar with what this channel is and what it does, first of all, just welcome. This is Stock Watch Sunday. Every Sunday night at 8:30 p.m. Eastern Time, I go over my favorite stocks that I'm watching throughout the week. And I also give you an opportunity to, you know, bring your own. And if you guys have ones you'd like me to take a look at, of course, we can go over them together. And, you know, it's always just been a really good community effort. Stock Watch Sunday is my favorite time of the week for me to be able to just connect with you guys on this level through live streaming. And so I appreciate you guys showing up and showing support. And speaking of support, guys, you've been blowing me out of the water. I can't believe it. You know, 500 subscribers, I think, within the last 24 hours. It's been absolutely incredible. Up over 18,000. It's been a wild and crazy, you know, last couple of weeks, and I just really can't thank you enough. It really just, I don't know, guys. I just really appreciate the love and support. So thank you so much. And speaking of which, if you have not yet joined this channel, hopefully I earn a subscription from you and I get a like out of this video if you see value out of tonight's live stream. And again, just welcome to Own the Chaos. The stock market is a crazy and chaotic place, and I made it my mission to help you own it and make you a little money in the process. So if you guys, you know, again, want to see more content like this, I put out videos on Monday, Wednesdays, Fridays, and do the live streams, which of course is Stock Watch Sunday at 8:30 p.m. Eastern Time. And so, yeah, let me welcome some folks in here. What's up? Mr. Monster. Thanks, Mr. Monster. I appreciate it. Chuck, what's going on? Yeah, I appreciate that, man. That means a lot, buddy. I really do appreciate that. Thanks so much for the kind words, guys. Yeah, I can't thank you enough. I think I'm going to get some sort of monitor over here so I'm not looking at this one all the time. I love having my big screen. Don't get me wrong, but I got to figure that out too. So we'll get that all sorted. But yeah, let me welcome some folks here. What's up, Miguel? What's up, Matt? What's up, John? What's up, King Bradicus? Good to see you. Yeah, so I see a couple of my Chaos Crew peeps in here as well. So if you guys are interested, if you guys are getting value out of Stock Watch Sunday, each and every day before the market opens up, I also put out a watch list for anybody who's interested in checking out and getting a good snapshot of the market. If you click join, you'll be part of the Chaos Crew and get that watch list from me each and every morning. I think it's a pretty good value, $4.99 a month. Not a bad deal. So if you guys want to check that out, again, the join is below my screen here, right next to the subscribe button. And yeah, So we're good to go there. And so let's get into what we're watching. So, obviously tomorrow is not going to be anything going on. So enjoy your Memorial Day. Stock markets are closed, of course, but Tuesday through Thursday are going to be interesting. Now, I actually missed the where I was right and where I was wrong. I missed going over that segment last week, so my apologies again. I was trying to still sort out the new audio video thing, so I missed out on getting to that. But I got top 7 stocks here, and there's going to be Workday, Dollar General, Costco, Ulta, VMware, and a CGC. And these are going to be the 7 stocks that I'm watching throughout this week. Usually every Sunday, I'll go over the ones that I got right and the ones that I got wrong from the week prior. And just off the top of my head, I can tell you that we went over NVIDIA. I was right about them beating earnings, but I was wrong about the movement. I still am holding on to NVIDIA, and I see a lot of value in NVIDIA. I think we see $400 sooner rather than later on NVIDIA, as it's now trading, I think, somewhere around 360s where it closed at on Friday. And a couple of other ones that, it was a really hit or miss week for me. Last couple of weeks, I've been knocking it out of the park. And some of these were a little bit lackluster as far as the reactions were concerned. I was right on most of them, beating earnings, but the reaction wasn't quite as positive. I will say that Lowe's came out, and I said they were going to be earnings. They did, and Lowe's actually went up from about $114 to about $125, so that was a really good move. Home Depot did not beat earnings. They had some issues with their, the COVID stuff was creating a lot of additional costs. So that was a problem, but the revenues and everything like that was up through the roof. Walmart beat. I was right about that one. And Target beat, but I was wrong about the movement. So Target beat, but then came out with some, issues, again, associated with costs as far as the revenue is concerned. So that stayed down below. I do believe Target continues to move up, though. They've been killing it, knocking it out of the park from the e-commerce side. So I think that they're going to be fine. If you guys are still in Target, I would remain bullish on that one, only because there's, even though there aren't a lot of good things going on in the economy, there still are bull markets in certain areas of the stock market. And you can only close down so many stores, and ones that have to remain open are they going to be the ones that do well. And again, we've talked about this. Target and Walmart were kind of the beginnings of that, and we'll talk about Costco in a second. I think that ends up following suit a little bit here, so we'll check out that. But let me go ahead and VISM definitely. If you guys are into the penny stocks, VISM knocked it out of the park as well. Thanks, Kyle. I appreciate it, man. You guys are first time meeting you. What's up, Jay? Good to see you. I hope you stick around. Wrangler Addiction, bro. We gotta talk Wrangler Addiction. I got myself a Rubicon, and if you got a channel, I'll be happy to check that out. Love the content. Interested of joining? Yeah, be happy to have you. Somebody's asking about the mentorship as well. We'll get into that in just a moment. But if you guys can, you guys wouldn't mind throwing some of your favorite stocks or stocks you would like me to take a look at in the chat. We're not going to do the phone calls. I have to figure out a better way of doing this. If you guys have been, if you guys are newer, first of all, I always have people call in every week. But because it's been so busy and my channel's been doing so well, I've realized that it's been exposing me to a few things. So one of them being that more and more of you are calling in, which is great. But I can't get rid of my call waiting. So you guys hear the beeping coming in. So I have to be a little bit more efficient with that, and I will get better. But it's been a little bit of a crazy week or two with the amount of growth that I've seen. So I've been trying to adapt and evolve as quickly as possible. So next week I will have something better for you guys as far as your abilities to be able to call in, because I do love that feature, and I know a lot of you guys do too. But for this week, we're just going to put that on hold. We'll leave that again. But if you can put those in the chat here, I'd be happy to answer any of them. Just make sure you give me some context, right? Like, why are you putting this ticker out here for all of us to see? Instead of just putting thoughts on and then insert ticker, if we can put some context to it, why you see value in this one, where do you think it's headed, and then we can have a little bit more of a better discussion. So if you could do that for me while I'm going over these, I'd certainly appreciate it. And let's get to it. So Workday is going to be an interesting one, folks. So Workday right here, as you can see, closed the day on Friday at 168.15. Where this is going to open up on Tuesday will be interesting. They have, let me pull this back up here. Hold on one second. They have earnings on Tuesday, if I'm not mistaken. Check my notes here. Yeah, I'm sorry, Wednesday. Wednesday after hours is Workday. Their expected earnings per share are at a loss of 26 cents. And I think that this probably falls in line with that. But this will be interesting to see what happens after market, after hours when the earnings come out here. I would say, though, that Workday ends up still remaining a little bit bullish here because you do have people that are working from home. And if you guys caught Friday's video where I was talking about more and more people are going to be relying on softwares as a service to help them work from home even better. And Workday is a great platform to do that with. When I worked for T. Rowe Price, if you guys don't know, before I quit my job and started YouTube and started trading full time, I worked for T. Rowe Price. It's a pretty big financial firm, and we use Workday. It's an incredible platform. You can do a lot of things with it, even if you're working from home. And I think that Workday ends up being an even better stock here moving forward. So if you can see here as far as the chart's concerned, if we're looking here on the daily chart, you can see that 170 seems to be a pretty tough resistance for it, which again, closed at 168.15. If this pulls back before Wednesday's earnings around 157, I think this probably does end up running into earnings. So here's how I would manage this one. If this comes back down to my potential buy zone around 157.91 or 158 and starts to bounce from those levels and make its way back towards that 170 area as it starts to run into earnings, I think that'll be the play. I don't know if I would be one to hold on to this one as far as earnings are concerned. If they actually end up surprising us, I'm sure that it'll move and blast past that 170. But as you can see here, this really hasn't recovered from the original crash when everything else crashed, right? It was as high as $200 per share, just starting to creep back and get back into that range. And so this one's going to be a little bit iffy. I would say that if you're looking to play this over earnings and it actually does end up beating, you're going to make a lot of money off of this one. But I would just be cautious. Maybe if you were looking to play over earnings, taking the amount of shares that you or the position size and maybe putting half of that, before earnings, and then seeing what the earnings, what we see as far as earnings are concerned, and then maybe adding to the other half of that position if you still see value in that. This way, it kind of helps you manage risk a little bit better, so you're not throwing the entire amount that you were wishing to invest in, and just kind of risking it, because it's going to be a really risky play going into earnings, as all earnings plays are. But sometimes we have a better idea of what earnings are going to look like than others. And we're going to get to that in a second, actually. So I think that Workday is definitely one to watch for, and those are the two areas that I would watch for either a breakout over that 169, 170 area, or a bounce off of around 157, 158, and maybe grabbing a position there to swing into earnings on Wednesday. So that is Workday. All right, so next one's going to be Dollar General. And Dollar General, it's going to fall in line with a lot of these other department stores. If you guys don't recall, or if you're new to the channel, I've been talking about a lot of these department stores or these big box stores and saying, these are going to do well. And you can see that actually Dollar General is up well above where it was before the crash initially happened. When the crash happened, Dollar General was sitting at 167. And so I think that this is actually going to be an opportunity to potentially short Dollar General. I don't know if this actually continues. This is a little bit too overvalued, in my opinion. And so, again, this is one of those ones where, yes, they've remained open. Yes, there could be potential that if they beat earnings, this may continue to go, which is why I'm saying why I have this area marked here at 185, because if it breaks over 185, this is probably going to continue to rip big time. So here's how I will play this. If you're looking at Dollar General, they have earnings Thursday before market open, so pre-market. Their estimated earnings per share is around $1.68. Now, they have beat earnings before. In the last, I believe, 3 quarters in a row, they've beat earnings. But I'm just very, very cautious about this because of how much higher it is than it was even before the crash. So I'm a little bit nervous about this one. Having said that, if they do beat earnings, there's a very good chance this will continue to run and maybe even get towards that $200 mark. But what I really probably would look for here is that if it does Even if it does beat earnings, I think this is already priced in, and that's kind of what I'm leaning towards the most. I think Dollar General, I think it's just the price is just baked in here. And so I would look for a break down below 172, because if that happens, there's a very good chance that this might still come down quite a bit. And so that's kind of what I'm looking for on Dollar General. I would say that if it does come below this 172 area, probably a good chance it'll come down to at least 167 and maybe potentially bounce from there, or continue to break that support and come down even further. So I'm not saying that Dollar General can't beat earnings and can't continue to run. It just feels like it's way too overextended here. And so that's why I would lean towards going in on this on the short side, only because I don't know. It feels like it's just way too hot right now, especially with the way that we've seen Walmart, Target last week kind of develop, and really nobody really cared about those earnings too much. Walmart obviously had a really nice move, but Target kind of sold off right before earnings happened, and it never really moved anywhere. So I would just be cautious with Dollar General. I know what the allure is, and that's why it's on the watch list, only because there's definitely something to watch for here. And you know, Stock Watch Sunday isn't a stock buy Sunday or stock sell Sunday. This is just, here's what happens if, you know, and that's why it goes on the watch list. So with Dollar General, definitely reasons for it to be here, but I'm just very, very cautious, and I would just be careful with this one. If this comes down and maybe bounces off of 172 and starts to running to those earnings for Thursday morning, maybe there's a case to be made to make at least a nice little swing trade and see if it can't beat 184. But I would probably stay away from this until after earnings come out, and then maybe make your play, maybe make your move then. So that's how I would approach Dollar General. And then we have Costco. Now Costco is one of my favorite stocks. You know, out of all the bigger stores, the brick and mortar stores, I love Costco. I just and this is actually from a personal standpoint. It's not because, and they are a great company, but it's not just because about the numbers. It's just about what Costco stands for. If any of you are employees of Costco out there, I'm sure a lot of you can understand that they take care of their employees better than any other, big box store like Walmart or Target, in my opinion. Now, I used to work for Target way back in the day, and Target was great too, but I just think Costco just provides the best possible benefits. They treat their employees right. They do everything the right way. And so if you're looking to invest in a good company like this, it's definitely Costco. They have good dividends and what have you. But going into earnings, they have earnings after market close on Thursday, and their consensus is going to be, according to Zacks, I just wanted to reiterate, I'm getting all my information from Zacks as far as expected earnings, guys. So if you go look that up, Zacks Investments Research, their expected earnings is going to be $1.91. I actually think they beat this, and why, right? Because this is going to reflect, all of the first quarter and what happened in the first quarter. Everybody was buying that invaluable toilet paper. Everybody bought all the chicken. They took all the chicken off the shelves and all kinds of other crazy stuff that, people buy when it snows. Like your bread, everything that goes bad the quickest. Bread, milk, that sort of thing, and then toilet paper. But that being said, I think Costco does beat that 191 earnings. Now, Costco's actually been pretty transparent with all of their sales, so I don't know if there's really going to be too much of a shock of anything. So I don't know if they really beat earnings all that handily. Maybe just above $2 a share, as the estimate is at 191. So that's where I'm kind of looking for. Now, right now, they've been holding very well up above $300. So if by some chance this actually dips below 300, I probably would scoop some up no matter what the earnings are, because Costco is going to continue to be valuable, even if by some chance we go into in some sort of second wave scenario where people have to be forced to go back into their homes, or shelter in place happens again. Costco is going to remain open, just like your Targets, just like your Walmarts, just like your Dollar Generals. All these companies are still going to remain open because they have to, because people still have to go buy that invaluable toilet paper. Speaking of invaluable, if you're getting value out of this video, again, guys, I would appreciate a thumbs up. I still haven't checked in to see how many people we have in the live stream. Last week, we had a record amount of people showing up. Hopefully, we beat that again this week. That'll be incredible. But yeah, guys, if you're getting value out of this video, I certainly would appreciate a thumbs up. And that is my take on Costco. Again, like I said, it is a solid one to just invest in if you're looking for a long-term investment. If you're building a portfolio that you're looking to put investments in and hold on to for years to come. You're a millennial like me, and you're like, I want something I can hold for 20, 30 years. Costco is definitely it. There's plenty of other ones, but this one should definitely be in your portfolio, in my opinion. And yeah, I can't say enough good things about Costco. But let me check in with you guys, see how you all are doing. How we doing tonight? Everybody else doing good? Looks like it. The sound's still not good. Are we sure? Do I need to turn it up some? Maybe. All right, cool. Hiwatha says amazing, awesome. Just made a deal. Hope says, what's up, Hope? Just made a deal with friends that own an ice cream shop to bake oversized cookies. Hell yeah. Oversized ice cream sandwiches. Send some my way. I'd be all about that. What's up, Jake? What's up, Jake? What's up, Lester? Sounds low, so I turned it up. How about that? That's probably better. Turn it up a little bit. I just didn't want it to be too peaky. That was my only fear. Guys, I mean, I focus real hard on making giving you guys the best quality. So I just make sure that the sound's good and all that good stuff. So awesome. Crab cakes, that's right. Awesome. All right, cool. Let's move on to the next ones. So we have the next one's going to be Ulta. Now this kind of sounds weird, right? Some people will probably be thinking that, maybe Ulta actually doesn't do well, because if people are at home and they're not going out, why then would Ulta makeup, if you guys aren't familiar, they're a makeup company, why would Ulta not do well? Or why would it do well? And so my argument to that is, you're seeing a lot of other people that are still wearing makeup, and you have, people women who are watching more makeup videos, just like, but probably more of you are watching more of just whatever you're interested in, Netflix or YouTube. Think about your favorite YouTube topic that you just watched more of. And so I think that because of that, you're going to potentially see a higher amount of sales. And I don't know, ladies, you can let me know if I'm right or wrong. We definitely have a healthy female presence here over at On the Chaos. So if you guys are interested, if you guys disagree, I definitely would love to hear from you. But I think that Ulta actually does extremely well. Now, coming here and looking at the chart over here at WeTradeHQ.com, you can see that Ulta has come down from the crash, came all the way down to 124, and has retraced about 50% as high as 234. And so what I'm looking for here, Zach's estimate here on Thursday after market closes, the earnings call at 61 cents profit for Ulta. I think they beat that. I'm going to say they beat that, and it's probably going to be somewhere around 80 cents per share. And so what I'm looking for from Ulta is that I want to see a break above this 223 area here. This seems to be a pretty tough resistance for it. So if it breaks up over that 220 mark, I think that probably ends up continuing. And then it doesn't really have another resistance or another real resistance on the daily chart here until around 250, in my opinion. So if it beats these earnings on Thursday, rest assured, I think this is probably going to run to 250 at least. So I think that Ulta is set up for a really nice move here, in my opinion, and I don't think that this actually comes back down at all. We have seen from Ulta in the past where they do miss earnings that it's a pretty strong reaction. So just be cautious of that. But I think that Ulta actually has a really nice comeback. I would say, what was it? Maybe two or 3 quarters ago, it had a really tough earnings call, and so I think that they've really recovered quite well from that, and I think that Ulta turns it around, and I think that this quarter that they end up actually beating those earnings and making a really nice move towards that 250 mark. Just checking in with you guys. So my wife gets her hair done at Ulta too. I didn't know they did hair either. Listen, I'm totally oblivious to all the things that Ulta does. I just know that they do makeup. There's an Ulta store down the street for me, and I know that I've done enough research on the company as far as, what they do, what their numbers are. But when it comes to the actual products, not so much. So Ulta's Tours R Us for women. I don't know, ladies. You kind of let me know. Let us know. That's what DJ says. Oh, it is. That is the Never mind. I know DJ. Yeah, she said I'm one of them. Sorry, it's cheaper than Sephora, but carries a break. Thanks, DJ. Appreciate you chiming in. I need to get out more. Maybe I just need to wear makeup more, I guess. But no, I do need to get out more. That's no lie. That's no lie. Appreciate you, DJ. Hope you're appreciating my Streamlab skills right now. At least my beginner status. DJ is the one that kind of gave me a little bit of assistance on this today, so I appreciate it. All right, so next one is going to be VMware. Now, the reason that I have this on the watch list this week, they have earnings. I believe that's on Thursday as well. Let me just double check here. And they do have earnings on Thursday after hours. So this is going to be another Thursday after hour watch. Now, according to Zacks, the estimated earnings per share are going to be at 66 cents. Now, all of the other, I would say all of them, but most of the cloud computing or cloud storage stocks have surpassed their all-time highs, or at least the highs pre-crash. So, and VMware has actually lagged behind that kind of movement. So I'm a little interested to see how this works, or how this plays out. And the reason being is because VMware has missed earnings the last 4 quarters. Now, that being said, the cloud computing space has not exactly been in high demand in the last 4 quarters. So I think it would be interesting to see if VMware actually beats earnings, what will happen to this stock if that happens. So as you can see here, there's a pretty decent support here at 128. And then, a resistance up here around 142, 143. So what I'm looking for here is that if by some chance before earnings, we can see this come down to around 127, right around that support line, 128, and see some sort of bounce and maybe a move up towards that going into earnings, then that, I think, is the play. Kind of similar to some of the other stuff that we talked about tonight. But I think that VMware actually does beat earnings and could potentially break that support all the way up at 143. Now, if it doesn't, look out below, right? So I don't think that holding over earnings is probably the smartest play. But if you see value here and you think that, this is going to follow the lead of all of the other cloud computing software companies, which I actually think that they will, I may change my mind the closer we get as far as holding this over earnings, but I gotta say, I mean, it's just a little concerning considering some of the earnings they've had in the past and just how much they've missed them by. It hasn't been like close misses either. It's been quite a lot. So we'll see. I mean, I don't know. We'll see. But I think that this definitely runs. I think there's a lot of people that have been so bullish on the cloud computing space that VMware, it would be a shame to see this miss the same similar move. So I think that if this bounces back off of 128, maybe even comes back down to at least 130, that would be a grab for me, and it probably ends up running into those earnings on Thursday. So this is definitely one to keep an eye on. And then finally, guys, we're getting to one of my favorite weed stocks in the entire sector. So I'm going to pull this up on the daily chart and then mark a couple areas here. And I'm going to do this on WeTradeHQ.com. Guys, if you're not familiar with WeTradeHQ.com, this is a website that I built with my partner, Jake. And we built this designed to help people learn how to trade in the stock market and create a community where we can surround people around not just beginner traders, but veteran traders as well, people that know what they're doing, and in an attempt to help others learn and grow and celebrate each other's success. It's absolutely free to join WeTradeHQ. It's free to be a part of the community. We do have paid services. I have a daily mentorship where I go live with folks from 9 a.m. to 10 a.m. Eastern time. I think it's the most important time of the market. So if you're looking to learn how to trade or invest in the stock market, I think that is the most important time of the day to learn. So if you want to be a part of that, the links are down in the description below, and I'm offering a free 30 days. And if you enter the code DELTA, which I'll put in the comments after the stream is over and done with, but if you put the code DELTA, you'll get your free 30 days. And again, the link's down in the description below. But if you just want to take advantage of all the free tools that WeTradeHQ has to offer, feel free to do that as well. But anyways, getting on to the Canopy growth here, this is going to be, I think, a really, really good, strong mover. If you didn't get into Canopy yet, I wouldn't waste a whole lot of time if it were me, especially considering how we've seen revenue numbers from a lot of the other cannabis companies, especially Aurora Cannabis. Now, here's the thing, guys. I have been super adamant about Aurora Cannabis being absolute trash. It's absolute garbage stock. And I think that, yeah, you could have made some money pre or post split, but if you guys caught the video that I put out about the top 10 stocks that millennials are buying, every millennial or every person that bought in the Aurora Cannabis pre-split was red. And then they devalued your position even more by going into a reverse split. And now it's moved up because they perfectly timed that reverse split just before earnings so that it could show off the revenue numbers, only to dilute that stock even more and bring the price down. So it's only a matter of time, in my opinion, that Aurora Cannabis sees below $10 and even further than that, because they have about $19 million in convertible debt. If you don't know what convertible debt is, then basically what that is that if you are the bank, for example, or if you are a lender and I'm Aurora Cannabis, and I say, hey guys, I need some money, but I don't have any money, and I don't even know if I can pay you money right away. But I have this publicly traded company where I could sell you a bunch of shares, and you can dump those shares whenever you want, and in exchange, you'll give me, $500,000 or $1 million or whatever, right? So then, you guys at the lender's like, man, that's a pretty damn good deal. I'll take that. So then give me those shares. I'll give you the cash, and then I can dump them whenever you want. But you got to do something for me. Give me some good news. Pump the stock up as much as you can so that I can sell it for top dollar. And so lots of times, unfortunately, that's how it works as far as convertible debt's concerned. So that's very basic as far as my explanation is concerned, but I think you get the idea. And that's Aurora Cannabis in a nutshell. They have an unbelievable amount of convertible debt. And I think that, the only reason that they went through a reverse split was so that they can avoid being delisted from the NASDAQ, because they were priced under $1 a share, which is a no-go for NASDAQ. And so then they come out with the revenue numbers, but I'm telling you, they will start dumping into the stock again. And I think it'll be sooner rather than later. And if you had to ask me about a cannabis stock to get into, it would be CGC. Now, I will say that the cannabis sector alone has just been beaten to death over the last 12 months. And I think we're starting to see a little bit more movement from them. I think the Rona has definitely had a lot to do with it, because people are at home, and I guess maybe they're partaking a little bit more than they used to because they don't have to work. So why not get high all the time while you're at it? And it's just the truth, right? We've seen alcohol sales up through the roof since people have been, sheltering in place. And so I think that this is just carrying over to, the cannabis industry. And so, in my opinion, Canopy has the best possible setup. They have as far as, debt to income ratio is concerned. And I think the revenue numbers will mirror in CGC as it has across the board. And in my opinion, I think that because they have the better setup here, because they are the better company, that they're going to have a really strong move coming out of earnings. Now, their earnings estimates here are going to be... Actually, I'm sorry. They don't have earnings predictions yet. This was the other thing. So it was originally anticipated that they weren't going to have their earnings call until June 2nd, I believe. They moved that up. So it's going to be Friday pre-market. And so I think it'll be, like I said, I think it'll be interesting to see how this moves. And if that actually makes any kind of move, because of revenue growth and where this company is going as far as the industry is concerned. Now, the thing is with the cannabis industry, folks, is that it's going to be really hard to invest in something like this until it gets approved on the federal level. Once it's approved recreationally on the federal level, then it's all bets are off. It'll be another green rush as far as cannabis is concerned, and everybody will be buying every weed company you can imagine. But until that happens, it's going to be slow going. You're going to have to be very patient from an investing standpoint on cannabis. And there's so many cannabis companies out there. The entire market's been diluted with these companies, and it needs to condense a little bit. It needs to consolidate, rather, as far as the amount of companies that are out there as it relates to cannabis. And the leader of the pack, again, like I said, is CGC. You can make a case for a couple of other ones. Tilray, who just had earnings, and they weren't all that great. And then you have Cron, which is another one, could potentially make a nice move, but I think that Aurora is ACB is also lighting cash on fire. Yeah, that's hilarious. I just saw that. That was hilarious, Andrew. But yeah, I just think that if you're looking to make a cannabis play, I can certainly see the case for CGC. And if there was one that I was going to make a bet on, it would be Canopy Growth. So that is the 7 stocks that I am watching throughout this week. So if you guys got value out of those, again, I would appreciate the likes. If you guys could keep those coming, I certainly would appreciate that. Thanks so much, guys. And so, yeah, let me check in with you folks. And now is the time where I get to kind of see what you guys are looking at, and we can kind of discuss this a little bit, see if they're worth trading this week or what have you. So I see here. So Kenny says, I got burned with Baba. When might it rebound? So this is a really good question. Baba's actually been crashing because of everything that's going on with legislation on the potential Chinese delistings, and I think that Baba is going to be just fine. In my opinion, I think all of this is just a bunch of posturing, and I've talked about this within my mentorship peeps, so if you guys hear me repeating myself, I'm sorry about this, but I think that this strain between the U.S. and the Chinese government has obviously, hasn't been a good relationship, right? But I think that that's all this is. It's just posturing, and I think that this is just people, I don't know. The Chinese companies aren't going anywhere, and I think Baba is going to present itself some really good opportunities. If this falls below $200 again, in my opinion, I think I would be scooping them up. And me personally, I think I probably will start scooping them up. I saw a really good support around $210, and then it just got annihilated on Friday. So if we go back and look at this on the chart, it just got crushed, and it just fell below $200 on Friday, closed at $199.70. I'm not familiar with what it did after hours on Friday, but I think that if it can hold right above $200 or right at $200, I think that'll be a good sign for Baba. But if it continues to break down below, it'll be tough going, and I think it could potentially come down here to around about 188, 190 before maybe seeing some sort of bounce. But it's been really choppy. I understand, but I don't think there's much to worry about. If you're invested in Baba, I don't think there's really a whole lot to worry about either. I would be looking forward for dips on this thing. The thing of it is that there's been so many people, and they crushed earnings, by the way, last week. They crushed them. So I just don't think that Baba's going away anytime soon. I don't think they're in danger of being delisted. And I might be a little bit short-sighted as far as that's concerned, but I really don't think that. Here, my thoughts are, there's so much American money wrapped up in the Chinese and the Chinese companies that if they start delisting them from the U.S. stock market, politically, and this is just me theorizing, politically, that would be like committing suicide politically. So if you look at the president's administration, if he allows that to go through, I think that's just political suicide, in my opinion. And there's going to be a lot of people that have a lot of money that are very powerful that are going to be really pissed if that happens. So I just can't see for the life of me that happening. I don't know. We'll see. Okay. Next question here. What else we got? Scrolling up here. Scrolling. John says, what's up, Brad? Would you break down WPM? WPM. Let's see here. And again, guys, if we could get some context to some of these. I understand that, you're looking to, just get some thoughts. I appreciate that. But if there's some reason why you're looking at something like, for example, wheat and precious metals, I definitely would appreciate some context why you're seeing value in this. But looking at this one, I think this is a little bit hot in my opinion. This thing has been on an absolute tear. You can see this has come down. I would wait for some sort of pullback. And where that pullback is going to be is kind of really your guess as good as mine. Look at this thing. Straight up, right? And let's pull up. So again, if I'm on WeTrade HQ, I can pull up some stuff here. I can pull up some indicators, and I'm going to pull up RSI because I'm willing to bet that it is white hot right now. And I would say that the relative strength index, even though it's not something that I would say is extremely, something that you should base all of your buy and sells on, I would say that this is a really good indicator that this is due for some sort of pullback. So if you're looking to buy this at 44.80, I would hesitate on that, in my opinion. And I understand the FOMO here, right? You're wondering if you're missing out on this run, and I would say that you probably already did. So I would just be cautious. And if you're looking to get into WPM, wait for some sort of significant pullback, at least a 50% retracement, maybe around $36.75, somewhere around there could be a potential pullback area. But getting it right now, extremely risky in my opinion. So definitely a good one to bring to the table. I understand the thought process, maybe as it relates around gold and the value of gold going up right now, but I would just be cautious with this and wait for some sort of pullback because I think that probably ends up happening. All right. Appreciate the donate, DJ. Thanks so much. I appreciate it. Always love people support my channel, no matter what form it is. So Shane asks, Shane Haley, is it overly optimistic to think MGM might move a couple bucks this week? So here's my thing. I love MGM. I've been preaching MGM's praises for the last 4 weeks. I talked about MGM when it was down $11, $12 a share and said that if it's still around in this area, it would be a clear buy for me. And it's gone up as high as $17 a share since. So I'm still remaining bullish on MGM. Here's the thing. Gamblers are itching to get back to the casino. And the casinos are itching to welcome them back in with open arms. Nevada is open for business on a phase 1 level. Vegas is exempt from that. Excluded from that, rather. So I would say that they're really, really close, and I would be holding on to some either MGM or Wynn, either one of those before the casinos open back up, because I think that maybe even Sands, or I would say you could probably look at Sands as well, but MGM is my favorite one by far. First of all, it's nice and cheap, so any of you beginner traders that maybe have smaller accounts, you can afford something like this and get a relatively decent amount of shares. Secondly, they have the best balance sheet out of all the casinos, in my opinion, and yes, that includes Wynn. So this is why I've always loved MGM Resorts. Not only that, but the insider buying on MGM from their board of directors has been outstanding, and so that just screams more confidence, in my opinion. And so I think that MGM actually makes a really nice move here. A couple dollars next week, though, that may be a little bit ambitious, but if we get some news that they're opening back up, and we have a date as to when they're opening back up, and there's a whole plan set in place. Shoot, man, I think that probably could. I mean, pre-crash, it was sitting all the way up here in the 30s. There's definitely potential for a double or better if they start opening back up and we get positive, movement from people just going in there and spending money with MGM. So I still like it down here. I still think it's extremely undervalued, and I would be holding some sooner rather than later before that announcement comes back out that they're opening their doors again, because after that point, it may end up being too late, and you don't want to be chasing this thing on FOMO. So be careful with that. I appreciate the question, Shane, and yes, I do love MGM. All right, moving on. Jordan says, "What's up, B? Hey, what's up, Jordan? Excited for Tuesday. Yeah, me too. What's your thoughts about casino plays?" And again, this is going to be the same thing. My sentiment's going to be the same. ERI, this is El Dorado. It says from 1650. I would say that El Dorado, let's look at it from 1650. And I'll just give it a quick gander. But this is probably, I'm probably going to have the same sentiment about ERI as I would about MGM or Wynn. All these are going to move once they open back up. It's just a matter of how much. And I think, in my opinion, when you're looking at these, you want to really focus on the balance sheets, how much cash do they have on hand, how fast can they get back up and running? That's a huge, big deal. So, I mean, I don't know. I'm not 100% familiar with how well set up El Dorado is for when that day comes. I do know that MGM is, and I do know that Wynn is. But as far as El Dorado is concerned, you can see that it's already made a pretty decent move up from around $20 a share. This is a little bit higher than I would like it to be. I mean, so ERI, you said it's 1650. Oh, maybe you're in from 1650. Oh, man, so you've already doubled your money. Okay, so here's what I would do. If you've already doubled your money on this flow, first of all, amazing trade. Congratulations on this. You've already doubled your money. So this is what I would do. If you've doubled your money already, I would take the amount of money that you invested in this company out. That would be exactly what I would do. I would take so for example, if you put $1,000 into ERI at your 1650 mark, and now you've doubled your money, then I would take half that position out. So, or $1,000 out and leave the rest in there, because at that point, and this plays into this perfectly, you're playing with house money at that point, right? You've placed your bets, you've doubled your money, so now that you can take and cash out the money that you put into it so that everything else in there is 100% pure and clear profit. So wherever this goes, no matter what you sell it for, it's for a profit or a green trade. So that would be my approach. Now, you don't have to take that advice. If you feel comfortable with the amount of shares that you have in there and you strongly feel like it's going to go up, which I do believe that it could continue to go up very much so, that's definitely an option. But if you want to play a little bit on the safer side and protect your capital, protect your initial investment amount, that would be the wisest decision in my opinion. So, but again, like I said, you could, take what you will with that, do what you want, but that's what I would do as far as Eldorado is concerned. But again, very nice trade on that. That's awesome. That's awesome that you've been in. I misinterpreted that from the beginning. I didn't realize that you've been in since 1650. So nice job on that. All right, so let's get on to the next one here. Peter says, I'm thinking about selling Datadog, but it just keeps going. What do you in the chat think? So DDOG, Datadog. So this is, I'm guessing, I'm not familiar with the company. Personally, I know of Datadog, but I don't know enough about it to give a full-blown opinion. But let's take a look at the chart. Maybe we can come up with a better decision. My first inclination when you're telling me that it keeps going, that's probably a pretty good deciding factor that maybe you probably already missed the boat on this thing. And given the fact that this is gapped up, I'm guessing this is probably some sort of earnings call back 2 weeks ago on May 12th or thereabouts, and this is why this is gapped up. So yeah, if we look at this, I'm sure this is like a cloud storage, cloud computing, or cybersecurity. Yeah, it looks like it's in that same sector. So I would say just be careful with this. If you're not already in Datadog, Peter, I would probably stay away, because it's a little bit too hot right now. I mean, it's definitely due for a pullback, at least somewhat, and then maybe consider getting in after that pullback. I could see a pullback down here around maybe $64 a share, or maybe even try to gap fill around 58. It's a little bit in no man's land, if I'm honest. I mean, since its IPO, this is way above its all-time highs, and rightfully so. Again, this sector is absolutely white hot. I would just be careful. Because I definitely think it has a pullback. And if it does, I think it comes back down to the 60s and maybe back down, like I said, to fill this gap around $57, $58 a share. So Chris says he's been long since May 15th, so you're doing well. Chris, again, like I said, same sentiments, right? I would just be careful just because it is it's screaming right now, right? You just want to be cautious with that. So be very careful with that. But no, again, guys, if you got in on this early, I mean, amazing trade. That's fantastic. Incredible. But now's the time that I would say you probably want to think about selling, because it can't just keep going straight up. It's got to pull back somewhere. NAT, good earnings. Dividends are good as a bonus. So again, we talked about NAT last week. The thing is with NAT and all the other shipper stocks, it's kind of my same sentiments like with Aurora. They have tons of debt. So whenever they have a positive move, it's only a matter of time before a huge offering comes along, or perhaps some sort of reverse split comes along, and that is just the cycle of a lot of these companies. Small biotech companies are the same thing. They pop on good news, and then they throw out a giant offering because they need money to continue their efforts. And so with NAT, I understand the allure here because there's so much low demand for oil, and they need to store it somewhere, and NAT's there to happily take their money, but they're still in so much debt that it almost doesn't matter. I know there's arguments for this to go on the bullish side, but like I said, I think that I just would stay away from NAT. They had good earnings, but as you saw, they still fell, just because it's the market. The company is just a garbage company. I wouldn't be in it. I wouldn't tell my mom to buy it, so I'm not going to tell you to buy it. All right. So, thanks Shane for the donation, pal. I appreciate it, brother. Thanks so much. I really appreciate that. All right. So I found, let's see. Now figuring Etsy is doing well. Wix is doing well. I'm going to guess does this too. Let's see here. Fiverr. Sorry. It took me a second to gather that. So Fiverr, asking about this one. I think they probably do well. Have they had earnings recently? I don't know when their earnings comes out. But yeah, I mean, I would say Fiverr's definitely. I don't know what their balance sheet looks like. Let's see. What are their financials here? So this is the other nice thing about WeTradeHQ.com, folks. Is this is all free? You can look up all their information and look at the charts, and it's all prices change in real time. So yeah, if you want to take a look at this, this is where I would look at their financials. Let's see here. Let's look at their P&E. Yeah, their P&E is not good. It's not good at all. So that's probably the biggest difference between Fiverr, company, a good company that's in the right time, in the right place, in the right time, is Etsy, right? Because Etsy's a good company. Their P&E ratio is through the roof. It's really, really good. So that's probably why I would be a little bit hesitant to be buying Fiverr. Now, I understand, obviously, the demand's definitely there. But, I mean, we'll go back and look at the chart. You can see it's already gone up. But this would be a company that I would say I'd be hesitant to be owning for too long. I mean, you can see it's pulling back a little bit. But I would be just very, very careful with it. I'll be careful with Fiverr. They do have, demand, obviously, right? Because everybody's working working from home or trying to start up that business that they've always been wanting to start up, from the e-commerce side. I'm a personal user of Fiverr for various amount of things, but I would say that from a company standpoint, they got to get themselves out of debt a little bit better before I would consider them a longer term hold. And this has gone up so much that I would probably be cautious of this continuing to go up without some sort of decent pullback. So I would say the pullback's probably got to be somewhere around $50 or lower, and then we start to see a bounce for a nice continuation. This is a little bit too hot for me at this point in time. So great question, though. I thought that was a really, really good question. For those of you still wondering, I've seen a lot of you commenting about Etsy in some of my previous videos, and I'm still very much bullish on Etsy. I still have Etsy, and there's no reason for me to believe that they're not going to continue. There's a reason, that their storefronts doubled in the month of April, and I'm sure we'll see how many storefronts they had in the month of May, but I would imagine that it's no small number. So I think that the demand for Etsy and shoppers on Etsy are only going to continue to increase, and I still believe that Etsy is going to see $100 a share before long. So in my opinion, I still would consider Etsy a buy below $75. So if you see it down there and you want to grab some up for a nice little swing or a longer term hold, I think Etsy is definitely a good price down there below $75. Definitely would continue holding on that, no question. Mr. Monster, iBio says that they can produce 500 million vaccines a year. I can see them getting a contract soon. So didn't they get funding, if I'm not mistaken, iBio? I think they got like $1 billion or $2 billion funding for a vaccine. My opinion on this one, and you may or may not have caught my mRNA video back on Monday, but I've been bullish on mRNA since February, since all this kind of went down. And so, in my opinion, I would say that that's going to be the one, as far as a vaccine is concerned, that I would still hang my hat on, only because they've gone through phase 1. They've gone through everything else. All of these other companies are playing catch up. And unless some crazy breakthrough happens with one of these, which, again, it's very possible, right? Unless that happens, but the chances of that happening are very, very slim. So if I'm going to hang my hat on a company that's actually going to be able to do well as far as producing a vaccine and then getting it executed and carrying it out, my hat is still hung up on mRNA, which, by the way, we can take a look at that real quick. And iBio definitely could potentially make a move, but again, we got to see something. Are they getting into phase 1 trials? Are they getting into some sort of advance in creating a vaccine? And that'll be the big question. But if we look at mRNA, it's had a rough week, obviously, right? It's come down. I think it's sitting around $69 a share. We talked about this last week in my mentorship with my mentorship folks, and I was like, this really starting to look like it could potentially settle out around $66 a share. And it's been rough. It's been a rough week, but I think that we see Moderna turn around here because this is a front runner. When it comes down to being hopeful on a vaccine, Moderna is definitely it. And when I talked about this last Monday's video about Moderna, it's still very much phase 1. Phase 1 hardly means anything. And so we have actually somebody who's in a biotech company in our group. So, they're giving us some nice insight on phase one, exactly what it means. So it really doesn't mean a whole lot, other than the fact that when they administer what they have to see if their immune systems are impacted, the patients and that sort of thing, that it wasn't. And so that was a positive thing, and we'll see where it goes from here. But I would still remain, if I was going to look at a company that was coming out with the vaccine, where I would place my money, and it would be mRNA. So thanks, Shane. I appreciate it. Chris has been short on mRNA since the 19th, so obviously that's working out pretty well for you, but I wouldn't be in that short for too much longer if it were me. But nice job on that one, Chris, for sure. Definitely got that one right, so nice job. So Kyle says, my question is, hold or sell Uber? You talk more and more about people working from home. Do you think this is affecting Uber in a negative way? So I've never liked Uber, period. And there's so many things about Uber that I can't stand. And not many of you watch this video, so I'll just talk about it briefly. But Uber, especially the Uber Eats side and this potential move with Grubhub, it's terrible for small businesses, small restaurant owners. And if there's any of you out there that are small restaurant owners, I would love to hear you chime in on this. But the margins in restaurants are so razor thin that the commissions that Uber Eats and Grubhub, DoorDash, all these other companies charge, it makes it so that they don't even make any money off of food that gets bought from these smaller restaurants. And it's actually killing Uber. Uber can say what it wants, but they have a spending problem, for one. When you're paying your CEO $40-some million a year and you still can't get yourself profitable, that's a problem. And people can argue about this all you want, but in my opinion, the way that I would run my business, that's a huge problem. The top 7 directors on Uber make $70 million plus a year combined. That's ridiculous when you have an issue as big as they do as far as debt's concerned. And this grow at all costs is going to be a problem. And I think that they had to do something about cleaning up their debt before and getting Uber Eats profitable. If that's really the area they want to go into. But again, just a side note, if you're looking to buy from a small restaurant, you're looking to take some carry out, just go to the place or see if they even have delivery. Don't go through Uber Eats or DoorDash, because if you really want to support small business, the way to do it is just going directly to the restaurant and asking how you can support them, and not give it to these big companies that don't know how to spend money. That's my 2 cents. I'm going to get off my soapbox now, and we'll talk about something else. So sorry about that, Kyle, but no, I would not be owning Uber here at this stage in the game, and I think that transportation's probably not going to be as high in demand, moving forward. And with you have Tesla coming out with their auto what is that called, cyber taxis, robo taxis. That's going to be a problem for Uber for sure. And so, all right. So next question, Teresa says, is it smart to invest in a newly listed company, NARI? Is it smart to list it into a new? That's a really good question. So when you're looking at IPOs, there's always risk involved, right? Highly speculative. Most of these companies are very highly speculative. I mean, we look at some of these recent ones, right? And we talk about Peloton, and we talk about SPCE, or we talk about a lot of these other ones. And even Tesla, when it was first IPO'd, you can see that, oh my goodness, NARA, was just IPO'd, I guess, this past week, and I probably don't have hardly any other information on it. Their market cap's at $2 billion. Don't have too much numbers on this one just yet. I have to take a closer look at this, but I will say, just as from a general standpoint, when you're looking at companies that first IPO, you have to understand that you're probably going to be into this for a while if you truly believe in the company and where they're headed. Peloton's another great one. They IPO'd, kind of fell on their face. Beyond Meat really fell on its face. I mean, everybody was so excited about Beyond Meat, went all the way up from $40 a share all the way up to over $250 a share, and then everybody forgot about the lockup period, and all these investors that got in before the company went public are now ready to sell their shares, and then it tanked all the way down to what, $80, $70, $60, somewhere around there. So that's the speculative and wild, crazy roller coaster that you'll experience with IPOs. So do carry a lot of risk with them, and they're always very speculative until they end up proving themselves. So, as far as my comments on NARI, that's pretty much where I would leave it at. Just make sure you're paying attention to their balance sheets and how much money do they have coming in, and what are their P&E ratios and all that good stuff. So that's something to definitely take note of and keep in the back of your mind, and also going into it knowing that it's going to be a bumpy ride if you're in it for the long haul. So great question. Okay, I'll take a couple more here, and then that'll be it. So Shock City Rocker, MAXR, been down off its highs, but that had a nice jump on Friday, possibly anticipation of SpaceX launch. Long in it, but I don't hear too many people talking about it. So I have seen MAXR toss around a little bit here and there, and it did have a monster run. You aren't kidding. Let me see if it gets pulled up. There we go. Okay. And let me pull up on the daily chart here. So yeah, it did have a monster run here back in late fall. MAXR did. I think MAXR is definitely a good one. I like their CEO a lot. And so if this actually can somehow break up above $12.30, $12.50, this probably actually continues from a technical standpoint, but from a fundamental standpoint, I think this actually does extremely well. And I think SpaceX actually is doing a launch here soon. Didn't they announce a launch as far as SpaceX is concerned? I think they did. But yeah, MAXR, definitely one that flies under the radar that certainly has potential behind it. I like this one a lot. If you're not in it yet, look for a breakup above that, like I said, 1230, 1250, and a nice continuation. But right now, it looks like it's experiencing some issues getting above that hump. So definitely one to watch for, especially if it breaks that. Okay, Andrew, NTAP company had earnings Wednesday after hours. Tuesday down 85%. Holy cow. What the hell? NTAP. All right, let's see here. NetApp Inc. Cloud company earnings Wednesday after hours. Hold on. Maybe I'm not understanding here. Oh. Somebody owns 85%? I don't know. I don't know if I understand that question fully. But I can take a look at it just to give you my thoughts on it. It's really hasn't come back after the crash. Let's see. It looks like it's trending in the right direction, though. We can draw a nice little trend line here and see that it's following a pretty decent trend. But, I'm trying to understand the last half of that. Toots down, own 85%. I don't know who that is. But if I'm looking at this, if they have earnings on Wednesday, that would be something to watch out for. What do the financials look like? It's not bad. They're not bad. Not bad at all. The company's not bad. I mean, maybe this is one to just watch for. I would probably trade it after earnings and see what that does, Andrew. That's what I would do. I probably wouldn't be holding this through earnings, but I would just be careful with this one. If it looks like it's trying to continue to run up, though, and again, looks like it's on a really good trend, but I think earnings will be very telling as far as NTAP is, and I probably wouldn't hold this through earnings. So just be very, very cautious about that. Shane just donating machine. He says, here's the spending time with Brad over my wife. And now I'm taking your money. But no, thanks, Shane. I appreciate the comedic relief in the donates. All right. Last one. Last one here is going to be for Patrick Yang. Patrick Yang, thoughts on Chewy. People love their dogs, and a lot of people have adopted during the pandemic. Stores have closed, and lots of people switch over to subscription services. E-commerce in the pet space has been absolutely on fire, and I have been a huge proponent of Chewy. They just haven't moved like you thought they would, and I really don't know why. I'm really surprised about this. So if we look at the Chewy chart here, I thought this would actually make a really good move after its last earnings report, and it just didn't. It just kind of fell pretty flat for the most part. And it's just kind of chilled here, right, in this $40 range, and this, the $37 to $43 range, and it hasn't moved much. but I still believe that this company is going to make a really strong move. I mean, you can see how much it's moved since the crash, right? It's all the way up. But I still think this continues to make a nice move, especially because of what it's dedicated towards. And I would say that, yeah, I mean, there's no reason why I wouldn't be bullish on this, but I would also say that it's formed a nice support around $39, so it's a little bit pricey as far as I'm concerned at 43. If you can get in on a pullback around $39 flat, I think that would be money. And you know, obviously seeing a continued you know, a bounce from 39, but you know, don't just buy it because it hits 39. You got to see some buying moving back up into there. So look for the bounce, not the fall to $39. But yeah, I like that spot there, and I would still remain very bullish on Chewy. I just can't believe that it's not higher than it is right now, and that's what's been so surprising, even though it's already made a really nice move. So, all right, Chris Shape looks like he's been killing it. So, thanks guys, I appreciate you. If you got value out of today's video, or tonight's live stream rather, again, if you guys could smash that like button. I don't know why everybody says smash the like button, by the way. What did the like button ever do to you that you have to smash it, destroy it, crush it? I mean, it's pretty darn good if you ask me. Helps out the YouTube algorithm, as they say. Maybe it does, maybe it doesn't. But anyways, I'd appreciate the love nevertheless. So if you guys can give me a thumbs up, thanks so much for that. And if you have not yet subscribed and you want to see more content like this, and if you like the live streams, then subscribe, hit that notification bell. And guys, that's going to do it for me. Again, reminder, the market's closed tomorrow, so there's not going to be any trading. So I'll be creating videos, though, so there'll still be a video that comes out tomorrow, so be on the lookout for that. And that is going to do it for me. Thanks so much, guys, for tuning in. As always, I will see you all before the bell, and B. Smith is out.